What's happening, guys? We've got Sunday Scan coming at you, March 29th in the week ahead. We are coming right into April, so we're going to finish off this month midweek, and then we pick up ideally right where we left off and start April with a bang. A lot of good action, and one of the biggest changes that I've made over the last couple weeks is, I'm not A plus right out of the open. It's for me, it's hands off. And probably the last 3 or 4 broadcasts, what I do in the morning, each and every single morning for members at 8:50 a.m. is, kind of take all these ideas and condense it into, a handful at max, but usually 2 to 3, maybe 4 names that are going to be on my radar. If you go back a month or two, it's right out of the open. I'm prepared. I'm ready to go. But over the last couple weeks, it's more of like, all right, let's kind of see how things pan out. I think these are going to be the best ones to kind of watch, but I'm not confident or comfortable taking those trades yet. And by doing that, it keeps you out of all the chop. It keeps you out of the garbage type of price action that we've seen lately. You could be dead right for a minute and then dead wrong for 2 more minutes, and then dead right again. So, that's okay to trade in a smaller size. But if you try to figure that out with size, you could be making emotional decisions that you normally wouldn't be making based off that price action, which is not where I want to be. As I've said, I've been trading fairly well. Obviously 2020 and 2021 has been, right there with it. I've had a couple hiccups here and there, but, my goal is not to just come and just hammer every single day. I want to take the best trades and kind of find that happy medium. I don't need to be making, 10x every single day. I want to just be steady and continually trade at this level for as long as I can, because it's not very stressful compared to where I could imagine, if I had gone 3x, 4x, 5x my size, some of the situations that I may have been in, not been able to get out of, liquidity rise, and things like that. So where I'm at, I'm very happy, and that's really the goal. Like I've said, if you stay firing on all cylinders, you will last there longer than you think, and it will add up faster than you think. And for me, it's about avoiding those headaches. I talked about a friend of mine that had continually been doing the wrong thing. Like yes, no. Yes, no. And, I kind of gave him a little bit of lip. And, from that point forward, thinking about June 15th, June 14th is the example that I used, I think 3 scans ago, but putting your target, putting your goals out and thinking realistically rather than I got to get this back by tomorrow. I got to get this back by next week, and really focusing on how do you get there? And before you know it, you're going to be there. And for example, that same person that I was talking with has already tripled his account with that June 14th, June 15th time frame, right? So, I think that speaks volumes, because this is not, somebody that's just this amazing, trader. This is somebody that's going through it just like you, that is, understanding, has a process, has his setups, and focused on just those. Where he went wrong is you start to focus on what everybody else is doing, or the one that's going nuts, or the one that you think you should trade because, it looks cool. That's not what you want to do. You want to focus on what you have an edge with. Process over profits. If you focus on the profits, if you're going to chase those big trades, it's going to go the other way. When he started to focus on just what he knows and just the types of trades that he's familiar with, guess what? Those big names that are going nuts are taking people's attention away from his A-plus setups and allowing him to have these less, headacheless type trades, because everybody's focused on the attention seeker, the shiny object, right? And so that is the point here, is it's not always about trying to trade the most popular name, the most talked about name, out there. GME, I traded it last week one time. The prior to that, I think I traded it maybe 2 or 3 weeks ago, right? It's not an everyday trade. If you try to force it, you're going to get chopped. So wait for particular setups to come into your wheelhouse. Wait for trades to set up in a manner that you're familiar with. Wait for something that fits one of your categories. I did a video a while ago about, kind of putting different trades into categories. And you should know right away, am I trading this setup, or that setup? Or do I file it into random? And if it goes into random, guess what? Maybe you make some, maybe you don't. But I bet you, if you look at that random folder, you'll see that that's where most of your losses come from. And that's exactly what happened to my friend that I've been talking about and using as an example. And once he just squashed that random folder and focused on just these categories, just these setups, he started to see what a proper process can do. And obviously, P&L went in the right direction. So let's talk about what happened this week. VIAC, Viacom, DISCA, Baidu, TME, IQ, VIPS, all the Chinese names, as well as some of, obviously, the U.S. equities, got smoked. And so what came out this weekend is somebody, likely was liquidated. I mean, it looks like that is what happened. But I always take that stuff with a grain of salt because maybe there's something more. You never really know. And what was interesting is that, it's been a huge unwind on these names. And Viacom was one that I had been focused on for the short. And, unfortunately, I missed it for the most part. I got the first part of it, but then, the second part, I just, I fumbled. And I missed that opportunity. That was really I'm not going to say once in a lifetime opportunity because there's every single week there's something new that happens. You've got, GameStop, you've got, this particular setup. They're setting up every single month. But a game-changing opportunity on that Viacom. And, what stood out to me is that, we're unwinding, and I was thinking that it was going to probably flush to, 55, potentially have some type of rebound, firm up at 58, and then, rebound. And so, this is a case of that staircase up, and, we talk about an elevator down, but this did not have an elevator. This was like no parachute and just like right down. And, the problem with that is these types of moves are super aggressive. And if you're new, if you haven't really experienced, a test of your risk management, you're going to blow an account because it's so easy to scale into a trade and margin up, and all of a sudden you own, 2-to-1 or 4-to-1 on margin. And guess what? That only needs to go down 25% and, your account's gone, no matter the size. So, sometimes we forget about that, right? What a 30% move can do if we're outsized, if we're oversized. It doesn't even need to go down that much. At some point, your broker probably, gives you a call or liquidates you and say, hey, you're not going into us. So what I think happened is, obviously somebody was liquidated. And, it looks like to the tune of $10 billion plus and shaved $30 billion off these market caps. Or at least Viacom, maybe some more on Baidu and others. But what happens is, you've got this liquidity event where somebody's just, continually selling. And then you've got these average downers. You got this little bounce. And so those average downers, those buyers, are kind of expecting it to like maybe bounce a little bit. And then it goes down to the next level. And then, they let it breathe a little bit. So as you're trying to sell a bunch of stock, a lot of times you'll see these things kind of pull, go down and then come back up a little bit because you're inviting liquidity, you're inviting bounce players, you're inviting players to come in and to trade that rebound. If you just went straight down, then the price is just going to drop and the liquidity is going to, dry up. You want to have these little bounces along the way. And so when it did test it, it flushed under 55, kind of based and ran back up to 58, but it stayed heavy. And, everybody that I talked to, everybody that I saw, social media, everything, I think the agreement was that it was a long. And the fact that it failed at 58 and stayed heavy 57 That's when I sounded the alarm, and I was like, guys, if you're trying to trade this, find the bottom, your level is, X. And if you're trying to trade it, below that and try to find the bottom, you're in for a headache. You don't really have proper risk management here. It could do anything. So I sounded the alarm real loud and went down another $15 per share. And I know that because I've been there. I've tried to find the bottom on names before, and you average down, you average down, you average down. And so what I think happened is you've got not only liquidation, but you've got all these intraday bounce players that are making intraday decisions, right? So they're taking a bounce situation and they're like, all right, this has got to bounce, and so they get in and then they add some more, then it pulls back and then it kind of hangs around and then it fails. And they're kind of faced with that decision. Do I size down or like, has this pulled back too much? In most cases, it's pulled back too much. So it can't go much lower, can it? And that's what happened, in my opinion. And so you've got the liquidation plus all these people that are playing the bounce intraday. And then they only got 2 hours left or 1 hour left. And they're like, all right, like, I'm not taking 4-to-1 margin over the weekend. I'm not taking 2-to-1 margin, whatever. This was not my plan. And now it's down $10 more. I don't know what to do. And they panic. And so you have that next leg down from all the bounce players that, failed. So with that said, I think that we might have a little bit of stability based on the fact that, somebody blew out over, the course of, Friday. Maybe they have some more left. Maybe they had some, Wednesday, Thursday. We don't know. But the point is that the news that came out this weekend or Friday that, somebody was blowing up and they, sold out. I think that's going to ease people's fear that, what the fear of the unknown, what's happening, right, with Baidu and all the rest. So I think that we could have some type of gap. If we have that gap, that doesn't mean that I am super bullish because there's a lot of stock that just got accumulated at very low positions compared to where it could bounce from. So I do think that we could have that rally back and that kind of situation where people are like, oh, I missed the bottom. I have to at least buy some. And we just saw it on Plug, FCEL, TQQQ, and all these other names that were part of, the market bounce where you saw them go way lower than you thought. Then they bounced up, gapped up, and they went way higher than you thought. So I do think that is a potential. However, I'd be cautious getting too bullish because I do think that we'll need one of those knee-jerk kind of, gut check moments and like, are you sure it's a long? Are you sure that was bottom? Are you sure that's the reason? Flush everybody out. Then it starts to collect. Flush everybody out. Starts to collect. And then we get that rebound. Just like you saw on all the other names. So we had that huge rebound. We had that gut check moment. And then we carried on. And then it's just whether or not it's going to stay heavy from there or continue to, grind. And, that I don't care about. I'm may buy some long term. I have a position in Baidu, VIPS, IQ, TME that I bought into the panic. But I also have a position in Viacom as well. But I'm not convinced that, that was it. I still think that they could do one more flush out, and that's what I'm prepared for. So I do think there'll be a little bit of a crutch on Monday morning. Crutch, maybe a little rally, and then another test. But it comes down to risk management and making sure that you know what you're doing. And the reason I wanted to talk about that is just because I just saw so many people get so long biased. And, throw out risk management, throw out the fact that it was staying heavy, throw out everything that it was saying to us. Like, hey, I didn't hold that level. Hey, I'm still heavy. Hey, I just broke lower days. And still the denial that it has to bounce. So that's why I was a broken record. That's why I was loud about it. Like, hey, this is the type, blow up type moment if you're not careful. So I think the plan, the biggest takeaway here is this is why you have a plan and you don't change it on the fly. This is why you don't wait out and see what it does because as you can see, the market doesn't care about you or about anybody else. So whatever the market's going to do, the market's going to do. All you can do is control your own risk. Couple other comments for this past week. I think that pre-market will convince people that particular prices are better than they typically would be. So, for example, EEIQ and WAFU, those were two education stocks, right? So normally, if you look at WAFU, you would never even consider chasing it at particular levels. But the fact that they run it up over 20, over 30, and they pull it back, all of a sudden now 14 is a steal. It's 50% off the highs. And so I would be cautious, always having that kind of thought process. Never underestimate how far they can go pre-market, especially 4 a.m., 5 a.m., and when they're ripping them up. But just remember that, they're creating this environment that makes you think one way. And I think that if you threw that away, you had a pretty good trade opportunity on WAFU on Friday, as well as the other educational names. So just always be cautious of, just because it printed at X level does not necessarily mean that a 50% drop is good, because sometimes you see it run all the way up and then you see them pull all the way back down. So price action is always the most important. Weekly giveaways for this week. Sometimes I do it in the middle. Sometimes I do it at the start, the end. This time it's in the middle. Icon meals. You guys know that consistency is very important for me. Whether it's working out, showing up to the desk, and eating. So Icon meals. Todd has been awesome, and he's been giving out, or gives me the ability to give out a meal, meals for the week. Once a month, and so this week Jeff H is going to get those. And once again, all you have to do is leave a comment in the comment section, your biggest takeaway. You guys are doing a fantastic job. I hope you see what we've been doing with them. Everybody that leaves a comment, your biggest takeaway and the timestamp, we've been pulling that stuff out and using it. And it's been very helpful and making a lot of aha moments for people. So I appreciate you guys doing that. Please continue to do that. Please like the video. But back to the food. Like I said, Todd Icon Meals. It's not a promotion. I use it every single day. I eat it every single day. But I'm just sharing you what I do. Same thing, Avidity Fitness. I haven't mentioned it in a while. So maybe if there's new people that haven't watched this video since maybe 3 or 4 months ago when I mentioned it before, if you're interested in 4 Zoom classes a week to get you back up in gear and rolling on the workout side, then PM me, DM actually Avidity Fitness on Twitter or Instagram, and he can set you up. And then Robert Garcia, 1 month of IU. We're just giving it away, all of it away this week. Robert Garcia, you got a month of IU. The comment you said was the obvious, despite being obvious, is not always the easiest, and it's because everybody knows what you're thinking, and if everybody's on the same page, you might be right in the end, but they're going to do that one more flush out, just like Viacom, just like all these other names that you saw on Friday. Everybody was on the same page, and we all know where it might be going, but that doesn't mean that the road to get there is going to be easy. And last but not least, Mike Little, you've got the t-shirt, so just email me, webmaster@investorsunderground.com, and we'll shoot that out to you. Last couple things. So I did a Twitter poll and basically, asked for some questions. And one of the biggest things that I said last week that I think a lot of people liked was how to make trading easier, right? Avoiding what you suck at. That's simple. Just avoid what you're not good at and watch what happens. We always try to go for that shiny object, that one that's moving, the one that's got all this, crazy volume. Avoid it. Avoid it and focus on what you know. And you'll be surprised what happens. So, Twitter questions. Having too many stocks on my watch list, finding a mediocre one, setting up and hitting, and missing the good ones. And, every day feels like he's like, I'm missing the good ones. Yeah, that happens every day. I mean, that's what's going to happen when you have 50 stocks running. So really it's about making that plan and making sure that it's your A plus. My A plus setups may not be your A plus setups. That's the point here, right? So the idea of that A plus is like, what are you best at? And whatever you're best at is what you should be showing up, looking for, and trading. And if you focus on those, then yeah, you're going to miss everything else that's happening. But that's okay, because you're killing it on your A plus setups. And every single day I miss opportunities. It's just part of the game. And you know what? The sooner that you can get over it and not have that FOMO, the better. Because you know what? I used to get so worked up at the fact that I missed stuff. Look, Viacom, I was so prepared for that short. And it was the easiest short off 100. I mean, it went straight down. And for whatever reason, it is what it is, and I missed it. But next, move on. There's nothing you can do except focus on your next A plus setup, and that's tomorrow. Troy asks, I'd love to know how you anticipate moves at the opening bell. It seems like you always have a good idea of where things will spike or flush down to the cent or dollar. I felt like A plus setups were constantly going against me on the long side. How do you know to adapt? So a lot of what I do, I take into consideration what's happened or what's happening. So, has it been easy money every single day pre-market? Meaning, have longs just been, rewarded for buy? Is it Monday? Monday, everybody's got, their accounts refunded, they're excited, they've got FOMO, they haven't pushed any buttons all week or weekend, and they're ready to go. So when they start to see something going up on Monday, for me, if I'm not long and I'm like, this could be a decent short at some point, I need to remember, hey, it's Monday. Hands off. Hands off until things, kind of cool it down or at least show their hand a little bit. Otherwise, I could underestimate, the power of FOMO on a Monday morning, right? So for me, I always look left, look at the key levels, look at where things could potentially run to, where they could potentially flush out to before they would either need to consolidate or, change trend. So that's the easiest way to kind of look at where key levels will be. But that is something that, that's probably my personal best trait, is anticipating range, anticipating where something can go to. And I think that you don't necessarily need to figure it out off the bell. Yes, there's some good action off the open, but I feel like if you are right, that's great. If you're wrong, it could cause you to ruin your whole day. Not necessarily losing, but just your mind, you're focused on something that is not A plus, right? So you're so focused on getting that trade 9:30 to 9:32 a.m. that all of a sudden it's 3 o'clock p.m. and you're still in that trade, trying to figure out what way it's going to go. So, and the only thing that is going to get you out of the trade is that bell at 4 p.m. So for me, hands off a little bit. I usually, it's totally different than what it used to be, and that's all about adapting, like you suggested. So, normally I'll have a trade potentially prior to 7 a.m. if I'm up, and trading that early, and to 7 a.m. Or, I treat 7 a.m. to pretty much 8 a.m. differently. And then I try not to get involved between 8 and 9. I try to just get a feel for what's going on, the momentum, the action, and then, react after open. Not at open, after open. When to exit a near perfect entry. My entries are close to perfect on a pattern, but always early taking profits, and it frustrates me to see the stock squeeze right after taking gains. Well, when you get the perfect exits, let me know. I've been trying to figure that out for like 17, 18 years. But on a serious note, always, like for me, I always leave a little bit on. I leave a flyer on. If I'm on the right side of something, you maybe go down to 25% position, 20% position, whatever it may be. But for me, that's something I call a flyer, and so as you start to trade more size, you don't want the perfect entry or the perfect exit rather, because if you wait for it and you miss it, you're not going to be able to get out, right? So you need that liquidity, you need that action to actually get out of stock. And I'm talking about, not 5 or 10,000 shares, but when you start to trade 50, 100, 200,000 shares of things like that, you're going to need a big liquidity event. You're going to need to not try to get the top and the bottom, but the meat of it, the meat of where it is, so that you can kind of work yourself out, work yourself in, whatever the case may be. So, there's double edged there. Yeah, we all want the top, but the top is not smart unless you're trading 500 or 1,000 shares. So for me, focus on the meat of the move. Focus on that, how much you can get out of that meat. And, if you want to leave on a flyer, leave on a flyer. I mean, that's what I do at times. And sometimes that works out. Sometimes, you say, oh, I should have just sold it all. But it's definitely, the next one from Kenny, getting out quick when a trade is looking bad. That was something that he was having a hurdle with. And I think one of the best things is to wish that you were in the trade than wish you weren't. It's better to be out than wish you were out. So get out. If it's something that you're not, confident with or comfortable with, like I said in the prior video, trades should be comfortable. If it's not comfortable, get out. Sometimes I get out and I get right back in. Right? I just needed to see that was going to hold, that was going to fail. And as soon as that happened, I'm out. And if what I thought should happen happens, I get right back in. That's fine. A commission, if you're, obviously there's free trades now at most retail brokers, but if you're trading and you're a short trader and you care about, quality of executions and all of that, obviously you're trading at better firms and you're paying commissions. I can tell you this. You being wrong, overstaying because you didn't want to take a stop, is going to be more costly than just paying that commission. A couple bucks here, 20 bucks, 10 bucks, 5 bucks, whatever it may be, is going to be less than the 500, the 1,000, the 5 grand, 10 grand, or whatever it is that's going to cost you because you were too proud to, just get out. So, when a trade is not doing what you thought, looking bad, not doing, anything that you had kind of set out to see or plan for, then, move on. You can always get right back in. And last but not least on these, when thinking about an A+ setup, but in reality, it was actually a C+ setup at best. Not getting that problem anymore in 2021, but 2020 was a big struggle for that. Used to add, thinking it had to work, 90% probability of them working, but that one takes you out for a stubborn loss. I think that's a great point because that is, exactly short selling, right? And if you're trading the front side of moves, and this is what I preach every single day. We have all these crazy momentum names, and if you're adding, you're just going to get blown out. So sometimes I dabble on the front side, but I will not size into the front side of the move because you can get blown out in this market. You can. Things are thin. 3, 4, 5, 10 million share floats, trading 50, 100, 200, 300 million. It's only going to take one. You could nail 90% of them, but it's that one that goes into a circuit, next circuit, and takes you out that takes all your money. So remember that. All right, let's get into the second part of the scan. We're going to fly through it because there's not that much. It's a couple main watches, a couple main thoughts. And, it's really going to be about coming prepared to the market. All right, guys. So, first and foremost, as always, put the disclaimer below. We are not registered advisors. We are not telling you what to buy or sell. None of this should be taken as such. This is all for informational and educational purposes. My goal is to share with you what I am thinking so that you potentially could learn from it and form judgments and trades of your own. First and foremost on watches, obviously, is going to be a VIAC. Once again, you can see that it was quite the unwind on Friday. You can see that it was kind of flushing out. Came back and it tried to get back over those 58, 59s, and it stayed heavy. You can kind of just draw a line here and see that it was, tested, and started to fail. So at that point, that's when you know. And at this point, on this bottom end, right where it broke this support level, this is when you found out if you had risk management or not. So, fortunately for me, I was, out of the day trade. I was out of the trade fully on this particular trade. I have a small long, like I said, because I just want to be there. I want to be present so that I don't forget about it, like I forgot about the short side. Sometimes I like to put on a tiny bit just to remember I did not put on a tiny short on VIAC, and therefore I missed a 50% plus drop. So, the day trade that I took was short and sweet, ended up working out great, and I left it alone after that. But, and I can put that chart up here for you guys as well. But this was the writing on the wall. You can see the bouncing ball analogy that we talk about on textbook trading and tandem trader. You can see that it failed to reclaim VWAP. So at that point, if you did not stop, if you did not, get away from that trade, you went into see what it does mode. You went into it's faded too much. It has to bounce, doesn't it? Mode. And that's just not good. So anyway, to flash forward to Monday, like I said, I'm hoping that it gaps down. I'm hoping that there's another opportunity to get long. However, I do think that between this and Baidu and TME and all these other ones, I do think that there might be a gap because people are going to say, okay, they're not all getting delisted. China's not going to zero. It was just somebody blowing up. And I think that alone allows people to kind of take a deep breath and say, all right, I'm gonna hold. It should bounce. And, so that is kind of what I'm thinking. And I know this is not a Chinese stock, but it was part of the bunch that was liquidated. So anyway, lower the better. But like I said in the room, you should not, consider this even a bounce until that, like basically that 52.50 starts to base. And that was the level that I gave in the room. As it came down, it started to consolidate over here, and people started to try to anticipate the rebound again. And I said, ignore it until 52.50 starts to base, and you can see that it never did. So just drawing lines like that, seeing where it has trouble with, and waiting for it to confirm or rebound the other way will get rid of so many headaches. I promise you. But anyway, I think that 49.50s is going to be a big level. If it does ramp in the morning, I could see this maybe going 50, 52 quickly, maybe a small overextension to 55, and then sit right back. I wouldn't expect it to really rip too much too fast because I feel like a lot of people are, in there on the long side, and they might have that first ramp, pull back, shake everybody out, and then potentially rebound. But I do think that they shook out a lot of the long side that was overloaded on margin, trading that bounce, expecting it to bounce. And I do think that a lot of this was them puking out their overextended size. So I would be open to the rebound on Monday, but I need to see, key levels start to base. I think you can see that there's a nice base put in at 43, and I think that this prior top of 46 you can probably use as sort of a guide. So if I was going to be buying weakness, I'd want to make sure that 46 held. I'd want to use 46 as my guide to risk. If that does not hold, then I don't want to be in the name. I'll be on the sidelines cheering for it to go lower. Baidu, fantastic. And TME, I bought both of these at basically the same candle, which ended up being the low. I wasn't exactly, not BYND, BIDU, wasn't exactly planning to buy the low, but sometimes you get lucky on the flush. I kind of anticipated the flush and started into the position in the IRA for a bigger picture kind of idea, a little bit smaller size, but bigger picture, thinking that, let's let this thing work. And ideally, and people always ask, why do you want it to go lower when you buy? But ideally, I was hoping it'd go lower so that I could kind of scale into that trade. But, obviously it didn't. It came back, retested it, double bottom, and then squeezed straight up. So I sold out all of the stock long. However, I had some calls which will turn into stock by Monday. So I do have a position there, and my thought is just like the same with VIAC is gap up, maybe a squeeze, and then gut check type of moment. Same thing with TME. I have a position there, and I bought into the 1660s on average, 1640s to 1680s. Ended up being about a 1661 average or 62. So I am trading those ones. And that's the main watches for me. I think that it's going to be a lot to keep up with. I think there's going to be some great opportunities, but take advantage of the moves. Don't try to be a hero and say this was it, this is bottom, this is happening. There's a lot of the U-shaped action. I traded this in the room, and it was great. Short opportunity, long opportunity, re-short opportunity, cover opportunity. I mean, there was opportunity all angles. But if you were trying to say, all right, well, I got a good average, I'm just going to wait because it can't go much lower, can it? Well, then you were probably disappointed. So in this type of action, I like to take advantage of the opportunity. Sometimes when I get long, I'll put something out, right away just in case it swipes up. But I think we're going to be very busy with these, and that's going to be my main focus. PRQR, had a member ask me about this one. I had mentioned the liquidity event. If you guys remember, I think it was 2 Sundays ago, JFIN talked about having huge volume, and then just went to almost a couple million, and then ended up squeezing. It went nuts. And so the trade here, or the thought process here, is that it could potentially have that buy-in day, that breakout day. And if it does, then we could have that move towards 9, 10, 11, 12. But I don't think this one is as thin. PRQR, yeah. Let me see here. PRQR. We have statistics. Floats 36, 37 million. So it's not really one of those situations where, in my opinion, it's a liquidity trap. And so anytime I mention these kind of words and it's a JFIN situation or another thin name with a small float, that's why. It's because it was super easy to borrow, tiny float, and 100, 200, 300 million volume down to 10% of that. And then the next day, if you can imagine, there's going to be less volume. If it starts to ramp up, then we get that squeeze opportunity. If you don't know what I'm talking about, if you're confused with what I'm talking about, go back to the prior Sunday scan and review the thought process behind JFIN. And it wasn't 2 weeks ago, it was last week. But this was Friday, and this was Monday. And we talked about the potential of that liquidity trap, that liquidity situation where T+2, you got the buy-ins and you've got all these covers, and that's exactly what happened. Stock, had a week open, it held that prior low. You can see that it had that base, and then it went nuts. So if you do have questions about that, go back to last week and watch the JFIN example, which was about midway through. But that's the long answer to, do I think PRQR is going to be a liquidity trap type trade? Not convinced. I do think that it could continue to have some good range if we base, over the prior resistance and get back up over 880s or 9. If we're not over 880s or 9, I don't care. I don't care about it. Otherwise, I would assume that it's going to probably fail off the next couple days. So watching it in case it has that follow through volume, but not excited about it. Failed follow through setups, WAFU, higher the better. I do think that this is going to trade a lot with EEIQ. So if we wake up and EEIQ is at 25 or 30 or 50 or whatever, then we have a potential that WAFU is going to be a lot higher. So like I said, I'm going to fly through these because FEDU and CLEU are all the same. So they're all educational names. They all went nuts because of EEIQ action pre-market when it went basically 4 or 6 to 70, and then WAFU went crazy, went up to 37, I think it hit. I ended up getting short around 29, 20s, 19, 18s, and it ended up being a fantastic trade. But if EEIQ does it again, then this one's going to go higher. If it does not, then you should assume that this one starts to fade off. Make sure, just like we use GME as, for all the Reddit stocks, and just like we use, some of these other names like TCAT or DLPN or any of those for the NFT market, make sure that you have up, the reason why these are running. So I always will have up EEIQ, on the monitor, so that if one starts to get away, I can react on WAFU or FEDU or CLEU. So again, those ones, EIQ as sort of the main, WAFU, FEDU, and CLEU. So those are the ones that I'm going to be all trading together. Last but not least, ATNF for failed follow through momentum. Higher the better. And beautiful fade looking left opportunity. I had a great trade here, that I posted. You guys probably saw, but again, another nice looking left opportunity. 1050s as the guide. Ramps up, stuffs. Does not mean that it has to stop there, but there is a good chance that it will. So that's why, you always kind of pick your levels, and it doesn't necessarily mean like I'm all in, I'm going for it, but I might start there based on the action. And it's not just because of the price hits. It's because of the action, the volume, whether or not it stuffs. There's just so many things that go into making that entry, making that decision, that it's not just it hit the level on looking left at 1050 and it's time to fade. So that was that one, and then we're gonna go into the continuation scan. So APTO. APTO is one of those where I just kind of got a feeling that it goes. I've been accumulating it. I bought it the first day, as you guys saw. I feel like a decent buyer came into the tape on Wednesday. Then we had market kind of correction day before it came back up. And then this one ended up having, a similar action to the market overall. So, what I mean by that is, if you remember, if we look at the SPY, SPY was completely unwinding and then it saved itself, right? So everything was just kind of getting beat up that day. And so we had that exact kind of action happen here. I used that as an opportunity to really size up because I had a small position from the day before. I sized up and I'm letting it work. So, could you be locking in here? Yeah, like I said in the scan last for Friday, I would assume that 6 to 620 is going to give you trouble. I would assume that it's going to peak there. But if and when it starts to base and break over this level, you can see that just by drawing lines help you, make it easy for you. If it starts to break over these prior levels of resistance, and this bottom line you can see, just kind of look at all the tops, and then the next level, the next tops is pretty much the 605 to 620, right? 610, 620, right around that range. Until it starts to base over that, I wouldn't expect that it's going to have that next journey, right? But for now, if you participated in the weakness and you got a good, entry, there's nothing wrong with locking in. Lock in around the core. I just know that I won't rebuy what I bought, so I'm letting it work. And if it works, great. If not, then I'll adjust risk accordingly. I'm kind of using that 550 over and under as a guide. Few others, DUOT. I didn't even see it, but it went to 12 after hours, I guess. But thin trader. I've been just kind of letting it work. I've been long for a little while, and it's been kind of skipping up. It kind of had a peak at 7 on the daily chart, and then it finally broke through, and it's been skipping since. So that's been an idea in the room. LGLH had a wild pullback there, but it feels like there's been a buyer in the tape the last couple days. You can see that every time it comes down to 420s, 430s, they accumulate it. But we're faced with that 5 top. So I feel like the 5 level is going to be that trigger. So I have a position in it, and it was starting to really ramp up. And I should have flipped it out every time that it went up to 5, but it didn't. So I would say that your key levels, you can see that it's had trouble the last couple times, 470s, and pretty much, this 5 495 levels. So, I'll round up and just call it 5 for simplicity. But, 470s is going to be your key as like a new base, in my opinion. And then 5s as that breakout level. And, see what happens with that one. I think it's safe to assume that it fails until it proves otherwise, just to keep you, safe. A lot of times people take like a long idea and they think that it has to work. But, I always look at the levels at, which ones should you assume that it's going to fail to, or fail at. And then that helps me make sure that I'm sized in properly, because if you assume it's going to fail at certain levels, then you're not fully sized. Let it break, let it prove, let it, continue on. And then, for me, I like to scale into winners. A couple others was RCON. This has been a nice one. Last couple days in the room. I have not touched the position except to take off about half on Friday. But I just had joined the breakout chart. Small GSMG. Nice little setup here, as noted on, I think it was Wednesday. No, maybe even like Tuesday. The first day. I had mentioned that 440s, it kind of looks like 440s is going to be our key level. I like the big picture idea, but you probably want to assume that this 440, 450 area has to break and consolidate before it starts to take on the next leg. So nice breakout regardless, and getting up there towards 5. So I like that one. I added a little bit more on Friday. So we'll see. Again, assume that it fails, but I'm using basically 430s to 450s as my risk. USDP, nice breakout chart. Again, it's just like the other one, RCON, rail, all these types of charts. In this market, I don't mind joining the trend until they stop working. So, this was another one that I don't own anymore, but same kind of thought process, RCON. USDP. So I'm back in that mode of just kind of joining a few breakout charts that are extending and ride the wave until they don't. And, if it starts to fail, then, I move on. And that's kind of the point with USDP. Last but not least was BGI, as always. Ended up pulling back quite a bit. So like I said, I should have sold a lot in the 5s. That's when it got all pushed all over Twitter with a bunch of new eyes and things like that. But I just know that I will not rebuy what I bought in the 2s. So, it's one of those that I just tucked and see what happens. But there has been a buyer each day that kind of brings it back up. But again, I would not be, long at this point if I didn't have a lower average. So that's about it. I got a couple other staying familiar names just to kind of keep on radar, but that is what I'm prepared for. Hopefully you guys had a great weekend. Hopefully we'll see you in the room. As I said last week, we had that sale, and so tomorrow's the last day for that. It's not going on another week. So if you are interested in getting involved in Investors or at Investors Underground and you have any questions prior to doing so, Cam at investorsunderground.com. Hit him up. He's more than willing to help you out, answer any questions you guys might have, and really, the key is just to avoid what you're not good at right now. Be patient off the open. Get prepared. Know what you're good at. Know what your A+ setups are. And if you know what your A+ setups are, then that's where your focus is. Who cares what Joe Schmo made on, XYZ? It's all about you. And the sooner that you focus on you, you will start going in the right direction. You're going to get chopped up trying to figure out, what way a particular 200 million share trade is going to go. And, I can tell you right now that, just like I said, 90% of the time you could be perfect. But guess what? It's that one that, gets you on the circuit halts that, you're trying to figure out which way it's going to go, and it ends up being a 50-50 situation. So I avoid those. I don't care about, I could have, should have made more. It happens every single day, and it's part of trading. It's always going to be part of trading. So the sooner that you get to focus on just you and becoming a better you, the better you're going to do. So see you in the room.